Hello, welcome back, and today we have a very interesting new journal here for our review. And thanks again everybody for sending in their journals. If you are an existing Edgewonk user, feel free to send us your journal and we will make a free review for you, help you understand where you are right now, how to use Edgewonk, maybe to make the next step, and provide general tips on journaling and performance improvement. There's a link as well in the description below for all information regarding our free review service. Let's get started, and this is a very great example this week of how to use Edgewonk to find out where to go next, how to improve your performance. So we can see at first glance the trader is hovering here pretty much around break even. Currently he's in a negative phase, -6% overall down on his account, and we see that there are periods of very sudden drawdowns where the trader is losing quite a bit in a short amount of time. There are periods where the trader is doing well. So let's try to see if we can find out how to get the equity curve in the right direction and where the problems of this trader are. First, we should go to the journal as always, and we can maybe start by sorting for the gain loss, because as we saw in the graph here, there are periods where the market or where the graph here dips quite suddenly, so the drawdowns often happen quite rapidly. And let's try to look at maybe we can find some commonalities, and for that we go to the gain loss. We can go to the gain loss in percentage maybe, and then we sort it for the highest outliers. And we can see there are a few if we compare it. On average, he has, as we saw in the journal, in the home tab, you can see the average loss is -6.9, the average win is 0.8, but you can see here the outliers, they at times become quite large, -8%, -3, -3, -2. So there's definitely something that the trader needs to work on. And when we go here to the right, we can see his trade comments, and there are a few things that really stand out, especially here in the trade management. He often uses the tag here, bad plan, or widen stop loss, not in trading plan, and those are the ones that we should really focus on. In the trade entry comments, we see things like too early, too late, where he chased the plan, not in trading plan at all. So those are really things that the trader should look at, and even more than just being aware, okay, that you are making mistakes when you enter too early, or when you enter too late, or when you take a trade that is not in your trading plan. Pretty much every trader will be aware of that, and that is quite obvious. We can take this a step further when we go here to our equity graph, and let's just take a look at the trades where he used those comments, and let's see how much he's really losing, because this can sometimes be a real eye opener. So keep in mind, we are in this journal here on a -6.37 drawdown, or in a total loss overall. And let's just take those trades where he said he entered too early and where he chased the price. Let's just look at those two, and you can see he has taken 40 trades out of his total amount, and this amounts to roughly 20% loss. So just eliminating those trades alone would put him in well positive account growth. He would be up around 14% if he could just, or if he had eliminated those. And this is where a trading journal really helps you make the next step in your trading. That's really where the power of a journal really comes in handy, because many traders, of course, know that you should not enter too early, you should not enter too late. But if you have a journal where you can actually tag those trades, and you can then see right in front of your eyes that you would have been a profitable trader if you just would have avoided those trades where you enter too early and too late. This can lead to a huge shift in your mindset, because you can now prove to yourself, okay, I could have been profitable, I could have been a profitable trader if I had just avoided those little things. And once a trader realizes that through the act of journaling and through reviewing his trades, this can lead to a great change. Whereas most traders, when they don't journal, they're never really sure of where to go. They know that they are losing money over the long term. They know that their trading results don't match their expectations, but they have no way of finding out or validating why they are actually not seeing the results they are after, and then they make the wrong assumptions. They maybe change their whole trading completely. They look for a new system. They get into the system hopping mindset. They enter into a gambling mode where they take too much risk. They maybe use wrong position sizing to get out of their losses. And once you have really identified where the problem is, you can take trades or approach trading from a very different perspective. Let's also take a look at the trade management comments that the trader has used, and he has used repeatedly bad plan and not in trading plan. So let's look for this one here. And here, what do we have when we go to performance? You can see 45 trades and the curve ends here, which is minus 35%. And again, remember the total balance here is down minus 6%. If he had just avoided the trades where it was a bad trading plan, or with the trades that were not in his trading plan at all, he would have been up 30%. And that is quite huge for the trader. When we just look back at his performance graph, at no point was he even above 7% in profit. So this can be reassuring to the trader that his trading is not that bad. He's not making everything completely wrong, but there are certain things in his trading that he should focus on. Let's actually take maybe a look here at, let's clear those first, and let's take a look, because he also used a comment where he uses an entry comment which is called good entry. So let's just take a look at what those say for him. And you can see the trades where he entered trades that are actually a good entry, they end roughly here. So this is between 40 and 45% of a performance plus, remember. And again, he has never been anywhere near even plus 10%. So the trades where he actually takes good entries, they would have made such a huge difference for him compared to where he is losing money on his other trades. So again, I hope this is really a big eye-opener for the trader who sent it to us, and that he can approach his trading for a more confident level and really see that, okay, he is not that far away from profitable trading if he can get his act together. Let's move on to the trade management graph. Some very important observations can be made here as well. The first one obviously is that the green graph is above the orange line, which means that the performance without trade management is above his current performance, which means that he is mismanaging his trades. If he would just enter the trade and then let either price hit the take profit or the stop loss order without interfering with the trade, he would have had a better trading performance. So if you see that the green graph is above the orange one, it means that by actively managing, or in this case mismanaging his trades, he's losing his performance, or is worsening his performance at least. Let's filter here actually for losing trades. Yeah, this is, I think, outside of the scope of this video, but I will activate the filter for just losing trades, and you can see here the performance here between the red and the orange graph is quite significant. You can see this one ends at minus 70 and this one is below minus 90. So there's a 20R difference between the performance of his losing trades. He seems to be mismanaging his losing trades quite significantly. Those can be things like maybe even letting his losing trades run past his stop loss, or he's doing other things where he could have closed the trade better. Something that really stands out as well. Let's clear the filter again and let's take a look at another interesting filter. So now we are back, and now let's take a look at the trades where he exited, because I saw that he's using this quite often. He's using an exit comment where he's often exiting his trades too early here. No exit signal too early. And here you can see this is also a huge difference. This graph, his current and his actual performance, is here at minus 10, whereas without trade management he would have been at a plus 10. And again, 20 are difference. It can make the difference between a losing and a winning trader. And again, he seems to be mismanaging his trades, and those two filters really show that quite nicely, that something here he's not doing well with his trade management, something that the trader should address in his further performance. Then I always like to go to the trade analytics and look for outliers. Although the trader already has quite a few things that he could work on based on what we have found already. Let me just reset this. And now we can maybe even find other things that the trader can use in his trading going forward. So first, I always like to look for the setups, even though I don't really know what the trader is trading or I don't know anything about his trading strategy. Let's just take a look at his setups, and I want to sort this here for first the sum. So we really look for outliers. Remember, he's now down totally over 200 trades, minus 303 euros. And you can see that here are a few setups, especially the first two, one-day spiker, overextended short. Those two together are making a total loss of 570 euros, so more than what he's lost. And those are only together taken 13 trades. So 13 trades for those two setups would have already put him well into positive territory. And that's one thing that if you are just getting started with the trade analytics, I know there's lots to do here, lots to look at. But if you are in the beginnings, just try to look at the outliers for both sum of gain, or you can also look at the expectancy. What is the big outlier here? And you can see that he is losing a lot of money with those setups here. Just a few trades on those setups here, but the expectancy is quite high on the negative side. So he's losing quite a lot of money with this one. Let's also take a look maybe at his trade management. That's always interesting to see as well. And do we have outliers here? When we look at the gain, yes, you can bet on that. Again, perfect trading plan accounts or would sum up to 2,700 euros. Compared to minus 303, where is currently a huge difference. But as well, when we look here at the trades bad plan or not in trading plan, when the trading plan did not work out, that's not something to worry too much on. If the other parameters around that are not too worrying, you can see he has taken a lot of trades based on that. The expectancy is moderately low, but here those two really stand out. Not in trading plan. Sum of gain minus 400, expectancy is quite high, but this one here, especially bad plan, minus 1,327, expectancy is quite huge here on the negative side. So those are the things that, again, he should really focus on. Improving the quality of his trading. Try to find ways how you can improve the quality of your trading and really understand your processes, or let's start there. If you don't even have a process, you should start there. That's one thing that we focus on in the trader development program in Edgewonk as well. We help you get a process and make sure that your trading has a little bit more structure, a more professional approach, because this will often have a very positive impact. He has used a custom statistic for psychology factors. Let's take a look at that at the end. And you can see here, he uses three statistics: good mood, stressed, and tired. And again, stressed, he only has taken 6 trades, but the sum of the gain is minus 480. Just avoiding trading when he is stressed would have already put him into positive territory. And you can see there are so many things in Edgewonk that we can look at, but if a trader is in his early stages, then you don't need to worry about all the bells and whistles. In the beginning, it is enough that you start tagging your trades with trade entry, exit, and management comments. Use maybe 1 or 2 custom statistics to get an understanding of your trading overall. Make sure that you fill out all the input variables for that activate then the trade management graph. And this will already give you so many insights into your trading. And then once you progress, once you get your equity graph a little bit more stable, a little bit pointing into the right direction, then you can move on into more advanced things like the alternative strategies. We can look at sessions, the simulator, we can look at other statistics in the trade analytics for order improvement. But in the beginning, don't get too overwhelmed by Edgewonk. Edgewonk is made for both beginning traders and advanced traders, and in the course, in the trader development course with Edgewonk, we also show you exactly how to use the right things at the right time so that you can make the right improvements and not get overwhelmed with your trading journal. So I think this is a very, very nice review because it shows exactly how to use Edgewonk in the beginnings, how to focus on the core principles, the core features of Edgewonk, and then use that in your own trading to make the next step. Again, if you want us to review your journal the next time, check the link in the description below and you can send us your journal anytime.